There's quite an argument between Omar and Gary Black. Instead of admitting he was wrong about FSD, Gary doubles down and demonizes anyone who is excited. I'm not sure who is worse, Tesla bears, who widely exaggerate every negative data point. For example, Q1 deliveries likely down year over year, but 30,000 of that is due to one-time Model 3 Fremont changeover, which is resolved, or Tesla stock bulls who pump every positive development. For example, bulls say FSD v12.3 will push FSD take rates above 50%. Okay, I don't think it's going to be 50%, even though FSD v12.3 is not close to 99.9% intervention free. Do your own research. Gary replied to Omar, LOL, a little revisionist history, Omar. I have been right about FSD not being included in a robotaxi evaluation for 5 years, and my 10 to 15% FSD take rate has been spot on. You said that Tesla was worth $1 trillion based on the auto business alone, based on assumptions that turned out to be flawed. The earnings growth is coming from the AI side of the business you didn't understand. I was wrong, says Gary. You forget that Tesla cut prices by 15 to 20% and destroyed 50% of their earnings power, which is making the competition suffer. And some of these companies are going out of business, like Fisker. So you destroy Tesla's earnings power in the long term or in the short term? I think it's only in the short term. But Gary also said, just to be clear, FSD progress as shown by V12.3 is nothing short of incredible to me. This huge progress only impacts Tesla stock if, number one, FSD take rates double or triple. I'm not sure about tripling, but I am pretty sure they will certainly increase, which should also, in theory, sell more Teslas, because some people will want to get a Tesla just because they saw a really good FSD video. Number two, Tesla sells more Teslas because of FSD. And number three, investors attach a higher PE to Tesla because of the robotaxi opportunity later in the future. So yeah, there's a bit of drama going on X. Cybertruck production continues to ramp. Joe Tagmeyer estimates that it is now near 900 to 1,000 per week. We saw an update from Tesla about the batteries, but we haven't reached 1,000 per week for Cybertruck production yet, at least not officially, but soon it is likely to be official. And at this rate, Farzad says 50,000 Cybertrucks sold in 2024 seems likely, which would make it the best-selling EV pickup truck in the world. Joe Tagmeyer projects 80,000 Cybertruck deliveries this year. Oh, good lord, please don't do this. The guy must have received FSD v12 update and he pressed update and then the car stopped moving in the car wash. Please don't do any Tesla software updates out there in the public unless you are parked in an actual parking spot. The guy in the video says, don't buy a Tesla, basically, so let's not create some negative publicity for Tesla. Solid-state batteries could potentially increase the ranges of EVs by a substantial amount, but the founder and chief executive of CATL throws cold water on solid-state batteries being commercialized anytime soon at massive scale. And we know that Toyota is trying to make this work. I would add, even if they do solve the problems, he lists you still have to find a way to produce them cheaply. The challenge is for them all around to be better than liquid electrolyte batteries in applications that demand high volumes of batteries. I don't see that on the horizon anytime soon. You will definitely see gimmicks and slick marketing presentations, but don't be fooled. Everything they say is usually true. It's what they don't tell you that really matters. I find the limiting factor to be the best source for anything related to batteries. If you haven't subscribed to his YouTube channel, I recommend you do. Omar shared how much he pays for his Tesla. For his Model S, he pays $300 a month, $200 in insurance, and then $100 in electricity. But for the Cybertruck, he does have a $1,700 monthly payment, $200 in insurance per month, and then $350 per month in electricity. He's been driving a lot. I personally purchased the Tesla vehicle in cash. I should have probably did financing and just put that money in Tesla stock. I would have been able to buy many more Teslas. This is actually quite big news. It's a moment in history is the best way to put it. Volvo's last diesel model, the XC90, marks the end of an era. The automaker's 45-year bond with diesel, responsible for half of its global sales from 2012 to 2016, came to an end on March 26, 2024. This is the world's first mass-produced 900-volt EV drive system, which can charge in 5 minutes. Okay, that was slightly misleading because I don't think it charges to 80% in 5 minutes. It gives you 150 miles in 5 minutes. Still pretty good. In 10 minutes, basically, you're ready to go. The peak power stands at 600 kilowatts. This is, of course, bullish for Tesla stock when reputable investors start buying more Tesla stock. This investor is buying Tesla stock. Seems like his firm has $8.6 billion under management. Now, he sold Tesla stock in the fourth quarter of 2022. Hopefully, he didn't sell in December, though, at $100. I assume he sold way before that. But now he's back. Specifically, he bought Tesla stock, I guess, on February 16th. So this is not new news, but it's relatively new. The hedge fund picked up 456,000 Tesla shares, making it the 9th largest holding out of 11 total. Previously, though, he was bearish on Tesla stock in 2019 and 2020. We have earnings from BYD, and BYD stock is down 3.5%. BYD struggles to meaningfully increase its lackluster profitability, which stands at 5.1%. BYD doubled its research and development expenses year over year. BYD's Q4 operating profit dropped below Q4 2022's, despite a 14% year-over-year revenue growth, and operating margin decreased to 6.9%. Oh, but the reducing operating margin year-over-year was not driven by reducing gross margin, which actually strengthened, but was almost entirely driven by a doubling in research and experiment expenses, since R&D expenses saw only a 20% increase year-over-year. With 8.1% of revenue, BYD is amongst the highest spenders on research and development. I don't think it's a bad idea to spend a lot of money on research and development if you are developing good products. Due to its scale, BYD's efficiency ratio has dropped for the first time below 2% of revenue. Selling expenses, though, remain elevated. BYD had strong free cash flow, which was driven by both strong operating cash flow and a significant reduction in capital expenditures. Compared to Q3, BYD's net income, though, was lower.